If you're a sparky, plumber or builder who prefers getting paid in cash, that habit is likely costing you tens of thousands of pounds in 2026. I'm not talking about morally, I'm talking about financially. And for most owners, they don't realise it until it's too late. As a business accountant, my team and I spend all day long working with small business owners, including, of course, a lot of trades, every single day. And over the last 19 odd years, I've seen it all. And I find for those businesses pushing taking cash, they tend to be harder to grow, get a mortgage, or just escape the cash flow stress. So today, I'm breaking down the 4 hidden costs of cash thinking and how the smartest trade owners actually build real wealth. Now, before anybody starts hitting me up in the comments, I understand the mindset completely. I know that cash can feel, often simpler. You avoid the transaction fees of, say, a card machine, and you think that ultimately you're saving or avoiding or evading tax and VAT. And I think sometimes some customers ask for it as well because they think they're going to get a great deal for similar reasons. Let's be clear, this is something that I think is really important from the offset to mention, and that's that taking cash is not illegal. There's nothing wrong with cash on its own. There's this myth that you kind of can't take it anymore in business, and it's absolute rubbish. I mean, side note, but politics aside, I'd argue that cash as a payment method is actually quite important for society and the economy. And I think that some customers simply prefer to use it, and not necessarily for any nefarious reasons, but because it's either their preference or sometimes it's practically for other reasons the only way they can do it, as long as you're declaring it in your records and as business income on, say, like your tax returns and your accounts and that kind of stuff. And that's the real problem here, is that some of you watching this and listening to me now won't be declaring it. And in my experience, that's just short-term thinking, and short-term thinking is ultimately expensive. In fact, this first hidden cost I want to talk about has got nothing to do with HMRC. We'll talk about that in a minute. It's about your house, or maybe your future house. And this is often the one that nobody thinks about in the short term. When you're under declaring that income, you're reducing your provable income. And in 2026, provable income is absolutely critical, is everything. We're not in 2005 anymore. You can't just self-certificate a mortgage and have any lender throw money at you. You've got to provide documents and evidence that show what your income is. And then you hope with those documents, you can actually go and get your dream house. I mean, you've probably seen it. You've probably seen that meme that's around that says, all tradies only earn 12,570 a year. And if you follow that logic and only earn that, and that's all you declare, can often mean a difference in lending power for your mortgage of about £170,000 just for one person. So that's 170 grand, all to save maybe 3k a year in personal tax. Yeah, and okay, there might be other taxes involved, but say you're saving this £3,000 of personal tax today for the cost of about 170k in borrowing power long term. Sounds like an incredibly expensive trade to me. And it doesn't stop at mortgages. If you think about it, you've got anything where you need lending, so car finances, business loans, even finance on your TV, pretty much anything where you're going to be borrowing money. And lenders don't care what you say you earn, they're only interested in what you can prove that you earn. So if you're the kind of person who wants things like a better house, one of those big ones with the big gates on the front, I like to call them peasant gates, or maybe you want to move to a nicer area, or maybe you just want to invest properly for the long-term wealth. And to do many of these things, you're going to need to be able to provide clean, provable numbers. Now, of course, there's the obvious HMRC risk. If they find that you've deliberately concealed your income, HMRC can hit you with penalties of up to 100% of that tax owed, plus interest. And I'm going to talk about that in a bit more shortly. But even if you're not thinking about mortgages and houses and that kind of stuff right now, cash can actually be the thing that's costing you work anyway. With most payments in the UK now being digital, and many people just don't even carry cash anymore, and I'm a big one for not carrying anything around with me other than a bit of plastic, or people do it with watches and phones now, don't they? So let alone an actual wad of cash. And even if a customer did actually want to pay with cash, getting thousands of pounds out of a bank account isn't as easy as it used to be anymore. Between the branches actually shutting down and the million and one questions they're going to ask you just to let you have your own money, it's actually a massive hurdle to do. So picture this, right? You say you've got a potential customer, let's call him Dave. Dave needs a boiler installed. You've quoted about 4.5 grand and you say, yeah, so cash, mate. Now they've got to find an actual branch. They've got to sit through that interrogation we're talking about to withdraw the funds. And then they've got to walk around with about 4.5 grand in their pocket. And that genuinely worries a lot of people. Or they can call the next guy. So let's say they call Bruce's Boilers. And Bruce says, well, how would you like to pay? Bank or card? Either's fine. Which one's going to look more professional? And be honest, right? And we see it all the time in our business conversations with people. To some customers, and I find particularly the younger ones, cash can feel quite shady, I guess. And that's even if you're actually declaring it all, but it's often that perception is reality. And I think that customers nowadays want that extra trail of paper or invoice or digital record showing that you've paid the money, because it just gives them that feeling of protection just in case something goes wrong. And if you want those bigger jobs, so I'm thinking about things like extensions, full refurbishment, appointments, those higher ticket jobs, professional image really does matter. And in our experience of working with owners building those serious businesses, they're not concerning themselves about card machine fees. You might think, well, why aren't they? And that's just because actually the maths doesn't lie. If you think about it, if you even lose just one single job, so say it's about that $4,500 job you've just lost, because you refuse to take a card or have it put in your bank, that lost profit would have likely paid those card fees for the whole of the year for many of you listening. And again, that doesn't seem like a great trade-off to me. And here's something people often overlook, and that cash isn't actually as free as it sounds. So you're worried about bank fees and card fees, but cash has its own cost as well. And it's a cost of handling it. So if you go to the bank and you pay cash in to a business account, most of those business bank accounts are going to charge you a fee for the privilege. And then you've got to add your time to that. So if you think about it, you've got to drive to the branch if you can find one, pay to park, go walk there, stand in the queue and all the rest of it. And if you were to work out your day rate and then divide it down into an hourly rate, it's actually a seriously costly exercise. Even if you spent, say, just 2 hours a week dealing with the admin of having cash, you're actually losing thousands of pounds in billable time every year. For that, if you are actually declaring it as you should do, and it's all properly in the accounts and the records, it's actually a pain to record in a lot of these software products. You compare that to digital payments that often you can set up some sort of automations, they flow straight into software, things like Xero, QuickBooks, that kind of thing. You can get to a point of almost total automation, which saves a ton more time. Now then we need to talk about that part that most people avoid discussing, and that's the HMRC. Now the reality is we're not in 2006 anymore. HMRC has got more data than ever. I did a video recently actually talking about specifics of all of this, including how they monitor your social media. And in an investigation, one of the first things they'll do is they'll look at your monthly personal spending, and they want you to make a sort of a grid of all of your personal expenditure, and they just work it backwards. So if you're declaring 30 grand on your tax return, but your lifestyle from the bits you've filled out shows you need to be at least having 60k for all your living expenses, plus your social media is showing cars, holidays, big home improvements, they're going to ask you questions that you're not going to be able to answer. And it also destroys the myth. If you just don't bank the money, you're going to be fine, because this type of exercise will just blow holes in that. Now, with up to 100% of penalties, as we spoke about, plus the interest, it's just not worth it. And they can go back 7 years on this, and in some circumstances more than that. And then you end up on like a blacklist, which means they're going to at least want to look at the next year's tax return. And you might be thinking, well, what's the chances HMRC are going to investigate little old me, Well, in my experience, many of the investigations we've seen over the years aren't actually triggered by HMRC. Quite often those ones are sort of data related. The ones where they're coming to look at this style of thing is often because you've been reported by somebody. So that could be an ex, could be an annoyed neighbour, could be a jealous business connection, could be some customer you've fallen out with. And I'm sure you can think of someone in your world like that right now. So then let me say something that might surprise you, and that's that the wealthiest trade business owners that we work with rarely actually talk about cash. What the smart trades do instead is that they focus on structure. They focus on building a better business and using legitimate tax planning from day one. So that means things like getting the right entity. Are you limited? Are you a sole trader? How's your structure set up? Getting the right pay mix, getting the right dividend plan, and if you're a limited company owner, means getting your tax deductible expenses sorted, means getting your VAT and your pricing set up exactly right. And look, I've recorded loads of videos on some of our frameworks for tax saving, like the tax funnel, and I've done one on business structures actually, which I'll link below. And in one of those, I show you how an owner took 118 grand out of their limited company for around 3 to 4% personal tax, just by understanding how best he could withdraw that money from the company. And for me, that's where the real savings are, not hiding the income, but using all the legal ways you can to only pay the tax you need to, alongside, of course, building a great profitable business. But for me, before you can do any of that, you've got to shift your mindset first. You've got to kind of stop feeling that you're missing out or that there's some magic solution, some sort of silver bullet. And I see it frequently in my conversations with other owners. They see, their mate down the road who's also in business, and they've got the big Land Rover, lovely car, they're always on holiday. They seem like they're absolutely smashing business and living the dream. And sometimes they'll even tell you, look, I didn't pay any tax this year, and it all sounds amazing. And you're looking at it thinking, well, I've just parted with a massive wad of cash to HMRC. How can these things all be true? I must be missing out. But let me give you the reality check on this. And that's, in my experience of seeing behind the curtain of so many of these businesses, a lot of them are just constantly running close to the wind. They hardly make any profit, if any at all. So of course they're not going to have a tax bill, because we're only paying tax on profits. The directors quite often living off, say, VAT money that's not actually theirs. So they're borrowing it from the company. They're pushing tax bills back. The tax bills here and there are all on payment plans. They're not paying suppliers. They're constantly juggling the cash flow. And all looks good on the surface, great car and all the holidays and the rest of it. But internally, it's absolute chaos, and it's just stressful for everybody involved. The real wealth is boring, It's clean books, it's healthy retained profits, it's having cash, it's paying tax, which I know is sad, right? It's sad, no one likes paying tax, but it is a lower stress and it gives you far better options for investment growth and ultimately building that personal wealth we're talking about. And that's what proper structure and mindset's going to give you. And in our world as business accountants, we like to think as paying the right amount of tax as a success fee. You know, we often say tax is a success fee, but the goal, of course, is only to pay the right fee, only the tax you have to. So you don't try to keep up with the Joneses and compare yourself to these other people, because the chances are that lifestyle was completely fake anyway. And you doing it properly, you will win in the long run. So build a business that actually builds true wealth and not just for the gram. Now, if you want help understanding how to legally structure your business to save tax properly, not hide it, and how that might work in practice, then watch this video that I've linked here. For more videos just like this one, be sure to subscribe to the channel here at Heelan Associates. We post almost every week with more practical advice for UK small business owners, and I'll see you on the next one.